Well, ladies and gentlemen, this is Greg Michalowski again. Today's date is May 2nd. We're into the month of May now, and I'm going to take a technical look at the sterling versus US dollar. I know I talked about that currency pair last week, looking for or outlining levels that were of significance here in the pair. In particular, talked about this trend line connecting high prices going back to, well, this day right here and this high right here. And if I were to scroll forward, that trend line came right here, and the market held resistance on Friday. And what happened here today? The market moved above that level. In addition to this high right here, or this trend line right here, we also had this high going back to the month of February. That level comes in at the 146.67. So the trend line and the high at 146.67. Also mentioned the 38.2% retracement getting in the way at 146.34. So all these things kind of came together in this region right here, a cluster of resistance. And I mentioned that it would be a tough nut to crack. Well, today we've cracked that nut. The market moved above the 38.2% retracement after closing below it all last week. We moved above the trend line. Now that trend line currently comes in at around the 146. I thought it was like 55. Yeah, let's call it 146.50. Also, we moved above the 67 level, and our high price extended up to 146.95. Now, so that would be bullish, but we're currently trading at 146.60, just above the trend line. And I'm gonna say that trend line is going to be a key level in trading here today. If we can close above that level and stay above that level, that would be more bullish for the sterling versus US dollar, at least in the short term. We would give all the benefit of the doubt. Not all of it, but most of the benefit of the doubt to the buyers above the 38.2, above the trend line. The only thing that gets in the way is the 67 level. We'd love for it to close above the 67 level as well, because that was our high price going back to February right here. So let's go to the hourly chart and drill down and see what that is saying. Well, I'm gonna put a horizontal line here at our 50 level. That's going to be, well, it's somewhere around there. That's going to be our level that if we go back below that line here in trading today, we're going to be a little bit concerned about the downside, about the failure above. What else might concern us on this chart right here? And if we take a look at these trend lines here, we have a steeper trend line here. We have a flatter trend line across the tops. So this is a rising wedge, and it's a bearish formation when you have this wedge forming where the upside trend line is at a slower slope, or a flatter slope, I guess I should say, than the lower trend line. So here we're seeing momentum, but on the top we're seeing sellers. And in today, we actually broke above that topside trend line right here. And as you can see, I'm keeping the original trend line in place. Why do I do that? Well, because we had 3 points on this trend line. Okay, 1, 2, 3 separate points on the trend line. So this break should have solicited more buying, shouldn't it? We should have seen the price take off to the top side, move above the 147 level, and move to wherever the mark was going. But we couldn't stay above that line. In fact, we went above it 1, 2, 3 separate times, and the market couldn't stay above that line. So we're kind of at a key level here for the pound versus US dollar, in my opinion, from a technical perspective. That is all. That we failed to extend above here to develop a momentum. We're below that 67 level. I'm going to move this up a little bit to the 67 level, this line right here. There we go. And the only thing that we need to do for the bears to kind of probably take a little bit more control is to move below the 50 level. If we were able to get below that 50 level, then I think we have a potential to test this trend line down here. And if we break through that trend line, that should lead to lower levels here in the pound versus US dollar. So we're kind of at this area now where we have to make up or the market has to make up our mind, not us, but the market has to make up its mind, and we have to just listen to what the market says. If we get below the 50 level, look for more sellers to keep a lid on this pound versus US dollar. If we're not able to get below the 50 level, we need to see the momentum off of this level and to break above this trend line and take this bearish wedge here, this rising wedge here out of the equation, and look for further upside potential, momentum and potential for this currency pair. If you like this video, please go to our YouTube page and click the thumbs up. If you don't like it, click the thumbs down, and feel free to put a comment, and of course share it. Share it to people out there. It is only by your comments and your thumbs up and thumbs down and sharing that we get the feedback we need on whether or not you enjoy these, and we want to share it with the rest of the world as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.